Hi, it's Peter Temple for February the 27th. That's a Saturday, and this is actually the market report for Monday the 29th, a leap year. I want to start with the big picture because there's nothing going on, and yet there's a whole bunch of stuff going on under the surface. And I'm going to start in a funny place, which is gold. So here's X gold. This is a 3-day chart. And just looking at the big picture, we've done this A wave down, ending in an ending diagonal. And ending diagonals always go back to their previous fourth, or their top of the ending diagonal. So this has done almost 5 waves up. It's done 3, and it's in a 4th wave. And I'm expecting it to get up to about 1305 or so before it turns down and we get a big wave. A B wave, rather. It's longer term, going up to about 1600 up here to complete this big wave, B wave, rather. And then it's heading down into a C wave at around 750, 740 or so eventually. So we have a corrective move, A, B, C, and within that we'll have some corrections as well. So that's over a fairly good length of time that we're going to see that happen. Let's move on to the US dollar. So what hit me here was the turn date where you saw in gold. Gold had actually had a turn date at the bottom of the first week of December. And what we're seeing with the dollar, which has been heading up and actually did a double top here, is that we also had a turn date at the beginning of December, which is now heading in the opposite direction. And I see this as a double top here, and we look like we're going to head down to at least, I think, the 38% retrace level, which is here. And a lot of people think the dollar is going straight up. I think it's going to have a retrace to 38% at least before it heads in the other direction. So that's my sort of short and long-term prognosis. I've been saying this for quite some time on the dollar, probably 6 months, that we're due for a correction. And I'm seeing that. And I want to go look at the euro right now, which has been doing that for some time. And I see the euro, of course, which moves in reverse, going to head up as the dollar heads down. And of course I correlated that with gold. Here's a 4-hour chart of the euro. So this is obviously moving in the opposite direction from the dollar, and you can see that it also bottomed at the first week in December. So we've got gold, the dollar, and the euro all changing direction the first week of December. And then it headed up in an A wave, and we've had this B wave down. This ended up 62% exactly, and now we're headed up in this C wave, but I see the C wave as going a lot higher. And if we go to a larger picture here is the 38% retrace, the opposite of the dollar, of course, and I believe it's going to at least this level. So that we've got longer term, but right now we're retracing in what I see as a second wave. So we've done this A, B, C, part of a C wave, and this is a very motive wave, which these C waves typically are. So we've got a 1, 2, and this is part of the third, the first wave of the third wave going up, this being a second wave, and it is almost at the 62% retrace line, which is right here, and this would be 62% from the bottom up. And I see us turning here at the same time that the dollar would turn down. The equities are also right near their target, but some of them haven't reached there, and I'm expecting to see a turn of the euro at the same time that equities turn. And so I'm seeing this across all markets is we're almost at an inflection point in a whole lot of markets, in the US indices as well, and I think when we get there everything is going to turn. So this is Prechter's all one market that I've been seeing for the last 6 to 8 months, and now it's getting to the point where it's really in lockstep and the whole market is turning at one time. Here is pretty well the mother of all stock indices, the global Dow. This is a 2-hour chart, and this is picking up sort of the third wave down, and the Dow has global Dow has obviously topped a long time ago, and so overall this market is not going up. There's still people that think we're going to top somehow, but we're already into the third wave here, and I don't know, and it's very motive, so I have no idea how we're going to top as an overall market. But when we take this wave here, the second wave, and we can see we've had a first wave down here and then a second, and I'm putting us we've finished the third wave. I'm putting us at the top of the fourth, and we've got this double four here like we have seen in all of the US indices. So we've got, again, all the same market. We've got a mirror image. But this one's interesting in that we've had a third wave down, a smaller third, and then we've had this fourth wave up, but we had this ABC down. And ABC is a corrective wave, so it's not motive, and it means that we've got to correct this wave, and so we've come up in an ABC fourth wave here, but it's interesting in that we have not topped, and this is the gap that I'm talking about here. We still need to top, and if you remember way back in November, when we had a lot of the US indices were topping, and I said, you know, we can't really head down until everything tops. And the GDOW was one of the last, and the NYSE was the last, to finally actually make it to exactly 62%, which each of them did, and then the market sort of started to come down. That was November the 3rd, if you remember. And so we're in another situation here where we've got all of our indices just about at a top, but we've got this little gap here with some of them, and so we're still waiting for the GDOW to top. And I'm going to go to the NASDAQ next because it seems to have the same little problem. So they all have to get here, and the stragglers as well, and that's really what we're waiting for. So we are days away from a top, and I'm looking at a cycle. The next cycle is being sort of the 3rd, 4th of March, and so that might be when this thing finally topples over. So this week, I thought it was last week, but this week looks like it's going to be the interesting one. Now here's the NASDAQ, and this is an hourly chart, so you can actually see the top at December here, and that was actually a double top. The NASDAQ was the only U.S. equity index that actually double topped here and finished off its 5th wave, and that was a clue that we had truncated in the Dow and the S&P, and actually the New York Stock Exchange as well. So here we have I've labeled this as the first wave down here, although it's a little iffy because, of course, this is an ABC wave, and I think that's just because all the other indices truncated and they have a similar looking wave, and they typically all move together. Then we had an ABC up, 2nd wave, 3rd wave, what we thought was a 4th wave, and it came down in 5 waves, but this wave is way too short, and I'm not sure that it actually is in 5 waves. I have a real problem with this first wave here being a 3. And so that kind of throws off this wave as a motive wave. And we're correcting it in a very solid ABC correction. And this looks like the 4th wave here, but we haven't quite reached there. There's the gap again. And we either are going to the previous 4th here, or we're going up to this little spike here, which is just above it. So one of those two, and we're just waiting for this to complete, as we are some of the other indexes. Here is a 30-minute chart. We're zoomed in on the S&P 500, and so it's got the same pattern as the other U.S. equities indices, and it came down here in what I'm labeling as a 3rd, 4th, 5th wave, because this is one, as well as the NASDAQ. The Dow did not make a new low here. The Dow is obviously finishing off a 5th wave. This one made a new low, but the interesting thing about this when it came down is these waves are overlapping. So the 4th wave is in the area of the 1st wave, which is a very hard Elliott wave rule. Can't do that. That means it's not a motive wave. It is a corrective wave. So we have to correct this wave, and when you have a corrective wave, it always retraces. So we have a very strong upward move here. And this last wave up has been a very motive 5 waves, and it all measures exactly correctly. So we had a middle section here that was 1.6 times the length of the first wave, and we actually, actually it's 2.6 the entire length, but all of these subwaves measure correctly from a Fibonacci perspective. And the first wave here, if we were to take where we are right now, the gap here is 1.618 times the length of the first wave. So that's where we've come down to, and this wave is very corrective right now. We'll see whether it comes down further. I just don't know where we're going with that. But if you remember from some of the other things I showed you, that we have the euro, which has got a little gap to go. We have the GDOW. We've got some of the NASDAQ, they all are looking at just one more little wave up. Here's the 62 retrace level. We could go up to that, but I don't think we are. I think this is based on the GDOW, is that everything is trying to finish this fourth wave, and we're trying to get some of the stragglers to get up a little higher. After we top here, I'm projecting in the S&P a 300 plus points drop to about 1620 as a low. So that's been my position for some time. It still is, and I'm just waiting for this thing to finish up. So good trading, and we will see you next week with another video.